Good evening, all. Ira Epstein with your Ira Epstein end of the day wrap up for your Spider ETF videos for this Monday. And we're the 23rd of March, 2020, and the time about 5:45 p.m. Daylight Standard Time. I'm certainly later than normal, but I think you'd expect that with all that's going on. We're actually moving our full studio so we can go back to doing these with me in the videos and all by Wednesday. So it's been a real task during all this, but we're getting it done. Now, in talking about the markets, so far, the way that I'm thinking these markets has been working out. You have a Friday where the traders have to figure out what do they want to do going into the weekend. It's typically bearish right now, where the market then on Sunday night sees the amount of cases, be it France, Italy, wherever, and they go up. Although Italy now is 2 days in a row of lower cases. Let's put our thumbs up and hope that's a trend. If that is in fact the case, we're seeing how the virus runs a little bit. The U.S. has not peaked out. You know that that's the case. So we get this situation where the markets get a lot of bad news. The Fed steps in, typically does something. The market sees the bonds and notes rally, the stock market falls, and then we get something of a Tuesday reversal. Now, if you don't believe me, go look at the chart patterns. They've been there. Then you waffle a little bit on Wednesday, Thursday, and you start the process again Friday, trying to figure out how do you want to be positioned for each weekend. Now, the news, if it continues every day that Italy's getting better, not worse, is phenomenal news, because that means that the market's not going to wait for how bad America gets. It's going to start looking ahead of the curve. Remember that. If you don't, you're going to find yourself in a problem. All right, let's go to the chart action and see what's going on in these markets. First of all, this is your tech spider. This is a new low for the move. Okay, what have we got also? If you take a look at the swing line, you got lower highs, lower lows, still bearish. To break this pattern, you have to take out 77.39. As we take a look at the moving averages, we had a bearish crossover right here. You see that? And the market has made a new low. So it's finished the idea of what the crossover had to do. That does not mean it can't go lower, but it accomplished its goal that when you had a bearish crossover, you made a lower low. If we look at the Bollinger Bands, this market's missing hitting that Bollinger Band. One of these times, instead of keep hitting it as the market's making these lower highs, you're going to get a turn the other way and you take out the 77.39 or some other high right in front of it. That will be your signal that the market has probably run out of the downside ammunition and you're at a value area. When I look at slow stochastics, are they embedded? To embed, you have to have 3 days in a row where the markets are under 20. They certainly have done that. So that means the market probably still gets sold by the pros on rallies, and when the red line closes over 20, that's when the market is screaming that it's probably overdone. That's what I'd be looking for. I'm not predicting when it can happen. I'm giving you the scenarios. The same thing is true of the SMH, 25 semiconductor companies that represent the biggest semis. And as you can see, you're not even making a run for that lower low. You have the embedded reading. Watch out. If you get that red line over 20, I'd want no part of the short side of this market anymore, period. The industrial sector still looking bearish, but again, it didn't hit the lower Bollinger Band. If I were short, I would not want to see this market get over today's high of 50.83. It's still embedded. I think it's more embedded than the semiconductors, so it's still one of more bearish areas. Same thing to be said in the energy sector. Lower highs, lower lows. All I care about now in the hierarchy of charts is when the red line closes over 20. Until that happens, I expect the pros are selling the rallies. When we come over to QQQ, lower highs. In fact, we've had this pattern continuing. You had a bearish crossover here, and finally you made the lower low. I have reached all that I had to on the downside. That does not mean I'm bullish. I get friendly when and if the red line closes over 20. Until then, I think the pros still saw the rallies. In my SPDR ETF video for subscribers, I discussed that in great detail. In the emerging market ETF, lower highs. Now, what about lower lows? If we look at this low, it's 45.77, then 45.73. Today's low was 46.19. Didn't quite take that out. A little surprising. Doesn't matter. I watch it. And until you lose the embedded reading, I don't worry too much. Obviously, a sign that the market's changing course would be taking out the highs of Friday, which were 49.39. In GLD, I've already changed my thought process. This market now has higher lows, higher highs, never did embed. What I am pronouncing to you is I think this market has ended this bear leg. And now the question is, can it begin a bull leg? It held the 200-day average of closes, the 100. I'm impressed with that. Yes, you went back and forth, but basically that's the zone you're spinning from. I don't feel the same way yet about the gold miners. You have lower highs, higher lows. I don't see anything there that I'd want to do anything with. When I come to TLT, the 20-year Treasury, you have lower highs. Do we? Let's look at that again. This particular high is 166.36. You have a lower high. But all of a sudden today you take that out. So now the pattern is neutralized. You got a higher high, lower low, and what did you hold? The 200-day average, the 18, the lower Bollinger Band. I don't know that I'd want to be either side of this market anymore. It seems to have lost its trend. In FXE, which is the ETF of the euro currency versus the dollar, lower highs, lower lows. What do I tell you about Bollinger Bands? The odds of staying under a Bollinger Band are 5% of the time. You want to cover your short on the first test. That was here. Yeah, you went a little lower, so what? This was still the first test, and the market's actually substantially right in that zone. It's gone nowhere from it. I don't know that I'd press the short side of that market. So as I look at all this, I'm trying to figure out what to do next, and my guess is that we're going to get a Tuesday reversal in many of the markets that were down today, and in some of the markets that were up, well, they might want to consolidate that, but I think they're giving us a sign that we're into value areas, and those are areas I'd pay close attention to. With that, I'm Ira Epstein. You have a good day.